Cern Basher is with me yet again, and Cern Basher promised that he is going to, well, Cern, it kind of reminded me when you were teasing this program the other day. People will talk smack about Elon. It's like, oh, what does he know? He should advertise more. Oh, what does he know? We need a Model 3 or a Model Q, rather. We need, these are the things that Elon, well, how stupid. How come he hasn't done this? And then somebody else will clap back and go, what do you think? You're smarter than Elon? Well, you now have chosen to take yet a different path, maybe suggesting that you know more about chips than Mr. Chip.
Well, no, not on that.
Okay,
so we'll get there in a second. But
yeah. Okay.
Yeah, I do want to challenge NVIDIA's strategy in some way.
Strategy. Okay.
And so we'll talk about that. I think you'll find that interesting.
Should they be advertising it during the Super Bowl?
Don't think they need to.
Do you think Elon should be advertising during the Super Bowl?
Possibly. Advertising robotaxi when it's ready at the Super Bowl could be worthwhile.
Seems to be FSD. FSD.
If the goal though is to sell cars, yes. But if the goal is to get people to use robotaxi at some point, if it's rolled out in enough cities, I'd rather they do that.
I think the goal is to make money. So if the goal is to make money, you're selling FSD for $7,000 and it costs you.
Yeah.
So you could, when you've got a $7,000 prize with no cost, it would seem like you could advertise and your ROI would be really, really good. It would seem like it'd at least be worth a test to just plus the FSD will sell cars in addition.
Yep.
And the FSD will sell the idea that this is a fait accompli and that the robotaxis are safe.
Yes.
So you get 3 for 1.
3 for 1. Yeah. Again, it all, to me, it's a question of timing. Ultimately, I don't think Tesla needs to worry about selling cars.
Probably not.
Right. But
ultimately, yes.
Where is that point relative to where we are now?
Right.
How compressed is that time frame? How long could that time frame be?
Right.
If the time frame is going to be longer than what we'd like to see, then yes, they should be advertising and getting people, letting them become aware of FSD and the benefits of FSD because it will save lives.
Right.
Right. And from Tesla's shareholder perspective, it will make the company money. So that's a good thing for everybody. Yeah, I agree with you.
All right. So Elon, call me. I'm just an independent consultant. I only charge $100 an hour. I mean, how much better could it be than that? Now, I suspect you're not going to be available to Jensen for $100 an hour. You're probably way more expensive.
You know what? He can have this idea for free.
For free.
If he wants to talk to me about it, I'm happy to discuss it with him.
There you go. All right. Okay. There you go. See, and I'm still charging for my time.
Yeah. No, I would do that for Jensen. That's the kind of thing I would do for the CEO of NVIDIA.
Yeah. What a nice guy you are. Okay.
That's right. So before we share that idea, let me put my disclaimer out there.
Yeah. Okay. Yeah.
Yeah. And before we get to the NVIDIA discussion, we're going to discuss a few other things really quickly here.
That's fine. We'll tease it for later.
Yeah. Now, we are recording this on Thursday, and this is breaking news.
Okay.
Neuralink had just completed 2 surgeries in Canada.
Wow.
First procedures outside the United States. And I think now there are 4 countries.
They let Elon do something in Canada.
Yeah.
Wow.
Surprising, isn't it?
Yeah. Okay.
Right. And so this is an exciting development.
Yeah.
I think more and more people are going to be excited about putting a computer in their brain.
Yeah.
Over time, particularly people that have lost eyesight, whatever it is, movement, and if they can regain some of that back, or that they can use a computer by using their mind, that is amazing technology.
100%. 100%.
Right.
So are you going to leave us hanging? Did these people survive?
Oh, I'm not aware of any issues.
Okay. All right.
Yeah. I don't think Neuralink would have put this out if it was a problem with the surgeries. Yeah. The Canadian healthcare system, Randy, isn't that bad that you're worried about whether people survive after operations. Yeah. If it's the New Zealand healthcare system, we might worry, but
Got a
Canada,
whole nother
yeah,
problem. Okay.
yeah. All right. Again, before we get to our NVIDIA discussion, let's kind of weave a little story here.
Okay.
This is the asset class returns table that we periodically look at, updated through the end of August.
Sure.
Gold is number one this year, up 31.4%.
So
It's
this,
had
let me stop you. What's going to happen with gold?
What's going to happen with gold? Well, gold is, if we're worried about inflation, if we're worried about debasement, if we're worried about fiat currencies, which we are,
Yeah. Yeah.
right? Gold is a beneficiary of that.
Okay.
Now, I happen to think that there's a better option,
Okay. I'm sure you
and
do.
and this chart shows that. If you look at the fourth line down, Bitcoin, while it's only up 16.8% this year,
Yes.
its annualized return since 2011 is 139% per year.
Right.
Gold is annualized at 5.8%.
Okay. So moving back to gold for just a second, I thought it was hilarious that the articles started popping up yesterday morning about gold not having a cat, that it was just going to keep going up and up.
Yeah.
And of course, now it's had 2 down days in a row.
Yes, naturally.
But yeah, of course.
Yeah. Yeah. Once stories like that make the quote unquote papers, then that's it. There's no one else to tell.
Right. Right.
Yeah. But international stocks, the EFA, Europe, Asia, Far East, up 23% this year.
Wow.
Emerging market stocks, third on the list, up 17%. As we mentioned, Bitcoin's up 16.8. Convertible bonds up 12.
Wow.
The NASDAQ 100 then coming in at 11.9. Okay. And the NASDAQ 100 has the second best return from this time period, 2011 through 2025.
Wow.
It's averaged 18.4% per year.
Nice.
So pretty solid. Again, pales in comparison to Bitcoin, but very solid.
Sure.
And then U.S. growth stocks just below that, averaging 16.3% over this time period and up 11.2% this year, and so on down the list. Now, you'll notice that in that 2025 column, there is no red.
Oh, yeah.
Everything is up right now at the end as of the end of August, anyway.
Oh, yeah.
Okay. Now, it's not totally rare. You can see that was the case in 2016, 2017, 2019.
Right.
All the asset classes were positive. Okay. So it's a pretty good year overall.
Sure is.
And frankly, it's nice to see some of the international markets doing better.
Even though, quite frankly, what would you call it? The old Western European countries and Canada are all doing horrible.
Well, here is the global equity markets in 2025. And in this list, you can see Canada's up 22%.
Their market is. Wow.
The US is up 10.7. We've got 6 countries in the red, and everything else is green. Greece being the top performing country, up 65%. Followed closely by Vietnam at 59 and Spain at 55.
Right.
It's a pretty good mix.
Yeah.
Eurozone stocks up 29.4%. Emerging markets up 20. The total world stock market index up 14.8. In the US, the SPY is up 10.7. Now, these are ETFs, so they may not perfectly match the performance of some of these markets, but it's probably pretty close.
Right.
You know,
it's interesting that the Eurozone is actually up that much. Why do you think? I mean, obviously Canada and the Eurozone are doing poorly overall in terms of their economies. Why do you think that their markets are up so much?
Why do you think the economy matters to stock prices, Randy?
Oh, well, the stock prices should be reflecting future expectations of the economy, right?
Yeah, and if the economy is weak, then maybe market participants are expecting rate cuts.
They're expecting rate cuts and improvement in the future. Okay.
Yeah.
Okay.
So yeah, so don't make the mistake of just looking at the economy today and saying, "Oh, why is the market weak or strong?"
Right.
You know, don't they know that the economy is this, that, or the other? There's many cases where the economy is in recession and the stock market is flying.
Sure, 100%.
Yep. Speaking of flying stock markets, this is the S&P index, a number of all-time highs. We have 20 so far this year.
20 what?
20 all-time highs in the index. How many times has the index itself hit an all-time high this year?
That's really weird. I've been quoting 70. And I thought I asked Grok for that number. Whoops.
Yeah.
You're
Grok has failed you again.
no kidding.
Yeah.
Wow.
Last year it was 57 days were an all-time high. The year before that, 0.
Okay.
2022, there was 1. And then we had a nice string from 2013 to 2021 of lots and lots of days of all-time highs.
Right, right, right.
So this is starting to look very similar to that 1989 through the year 2000 period,
Right.
right? And there are some similarities in terms of massive investment back then of the internet, certainly in the late 1990s, and now AI. Uh, we'll see. We'll see how long this goes. Hopefully, we don't have another period like 2001 through 2006, where
Yes.
there were no all-time highs for a period of 6 years.
So just a really quick one. People have pointed out that the investment in 1995 to 2000, the infrastructure investment was primarily cable.
Yeah.
This was where, it was the what do you want to call it? The telecoms that were investing all the money, and that's where we had some of the biggest problems. And then there was investing taking place in companies that had no actual business, no actual revenue, no actual profits, and they just stuck a .com and people bought them. We're not seeing any of those. The only repeat we have is we have a repeat in terms of infrastructure. And that's the place where, some people are a little nervous on the infrastructure side. And some people are saying that now there's a few AI, people are just adding AI to their name that are getting a little, startups that are getting a little priced a little too heavily, but it's nothing like the 90s yet.
I feel that phenomenon happened a couple, 3 years ago.
Okay.
Just adding AI to your name,
Right.
getting VC money interested. I feel like we're beyond that now.
Okay.
That's my perception. I could be wrong, but I think we had some of that in the early days of this, but not to the extent we had in the dot-com boom, where you added .com to your company and you went up 200% in a day.
Yeah.
Yeah.
The great concern, I think, right now is on the SaaS companies and whether they are able to disrupt themselves with AI in order and maintain a future.
Yeah. Now, this is an interesting chart or graphic here from JP Morgan. So the tech sector capital spending has been contributing 35 to 45% of overall US GDP growth over the last 3 quarters.
Wow.
This is remarkable, they say. In other words, without tech capital spending, US growth might have already converged to about 1% due to weakness in consumption.
Yes.
Some GDP growth impacts are exaggerated since tech equipment is partly imported from Taiwan, but the general trend is the same. Tech capital spending is an increasingly important contributor to both growth and equity valuations. Okay. So, and if you look at these charts here, the Mag 7 CapEx plus R&D this year is expected to be about $650 billion. Now they've got Tesla in here, and it's just a little sliver compared to some of the others.
Right.
Amazon spending massive amounts, Meta, Google's red, Microsoft is blue, and then next year it's expected to be about 750, up $110 billion next year in terms of capital spending. So this year was a big growth over last year, up 158 billion. And last year it was up 95 billion, and the year before that it was up 24 billion. So we've seen an acceleration in this capex from just this Mag 7 companies.
Yeah. Yep.
Okay. Now again, it's not just about the amount of money you spend, and Tesla, I think, is proving that. It's about what you can get from it, and it's amazing that Tesla is accomplishing what it's doing with relatively little spend
Right.
compared to some of these other big companies.
As usual.
And of course, Nvidia is doing the same thing.
Right. Yeah.
And Apple's not spending a whole lot either, but that may be to their detriment. We'll see.
Yeah.
Right? Or maybe they're saying, well, we'll wait for the silliness to stop, and we'll scoop in and buy something at a massive discount.
I did see a headline, and I saw it 3 times, so I think it's true that Apple has now actually asked Google to help them save Siri.
Yeah.
Yeah.
Yeah, they're partnering with Google. Yep. And then, of course, this chart, which is worrying to many people, but it shows the contribution to real GDP growth personal consumption expenditures is less than basically IT growth that's contributing more to GDP growth.
Mhm.
But it's just that personal consumption expenditures have come way down, so much. You know, of course, IT is going up, but this I think looks worse than it really is.
Yeah, I think so too. Everything that I'm seeing right now, there was just at least 8 of the big box stores that reported over the last 2 weeks. I mean, just go down the whole list of the big box stores, and then you had Target and some of the really big, the giant retailers reporting pretty much across the board. Almost 100% of them said tariffs not an issue or a very minor issue. They've already got it in their plan. They've already figured out what to do about it, and that the consumer is resilient, and they gave good guidance.
Yeah. Yep. No, that's encouraging. Companies are pretty adaptable. They find ways around things. It's the uncertainty that's tough for companies, but once new rules are in place, they figure it out. This was kind of interesting. This shows hyperscaler CapEx and R&D as a share of revenue. So we've got Microsoft, Alphabet, and Amazon all clustered here at about 35% of the revenue they spend on CapEx and R&D. And the outlier on this chart is Meta up here at about 65%.
Yeah.
So, Zuckerberg's sort of desperately trying to play with the big boys, or, he may be seeing an opportunity these other guys aren't.
Right.
We'll have to see how this works out for him, but they're spending a lot relative to their revenue.
Yeah. Huge.
Okay. And of course, Tesla, it's probably down here somewhere.
Right. They didn't even put them on the list. Yeah.
Yeah. So anyway, JP Morgan, they conclude here, they say, how long this can last is one of the most important questions for the US economy and for the markets in terms of this massive spending on AI CapEx.
Well, so again, the podcasts that I listen to are all pretty much of a mind, and I think it's the right mind, which is these guys all believe that there's no second place.
Yeah.
And they have to believe that. There might be a second place, although history doesn't really show us that there's a second place. Right now, it's winner take all in maybe the most important race, the most important prize that there ever has been in business.
That's right. Yeah, my personal belief is that this spending will continue for quite a while.
Yeah.
Now, it would be nice if we could find ways to make these AI systems, data centers more energy efficient.
Yeah.
And so I think there's a real incentive to do that. If we can't, we're going to find in the United States that perhaps we're falling behind what China's able to do, and that would be worrisome.
Yeah.
But it's certainly spurring development now too in the energy space, energy generation side, which is great. Right. And we've needed that for a long time. So I think there's some very positive things that could come out of this, but yeah, we'll have to see. Certainly these AI systems aren't where they need to be yet. So I sort of feel like there's a lot more development to come. And what they've shown is that you just need to apply more compute to the problem.
Yes.
So until there's some other solution, then the spending continues.
Yep.
Yeah. Okay. One last thing. This is the S&P 500 index milestones. It shows basically how many days it took to cross over each 100-point mark, starting at 1,000 back in February of 1998.
Okay.
And you can see how many days it took to cross each milestone.
Right.
There was a 13-year period here where it took to go from 1,500 to 1,600, which was a 6.7% move. But lately, it's been happening at a pretty fast pace. Again, these are point moves. The relevant thing in my mind is the percentage gains.
Right.
So a 100-point move back here was 10%, and now a 100-point move is like 1.6%.
Right.
So not as relevant.
Sure.
But still interesting for those that like to look at this. All right. Best performing stocks this year in the S&P. Palantir up 107%. And then we've got a smattering of all kinds of companies.
Yeah.
GE Vernova, squarely well-positioned in the whole, energy generation space.
Yes, and people need to know that GE Vernova has small nuclear reactors SMRs. They're planning to start putting them into service in 2030. Given what's happening with the federal government right now, I haven't heard any updates, but they might be trying to beat that date. But that was the date they gave about 6 months ago.
Yeah. And there's a number of companies in that space, and it's kind of an exciting space right now.
Right.
So anyway, that's interesting. And then the worst performing stocks, the trade desk is down 53%. Lululemon's down 47%.
Oh.
And so on. So a good smattering of companies. Target here, we've got Target, big company, down 26.7%.
Yeah.
And Clorox, I guess people aren't into cleaning anymore, down 25%. Maybe they're waiting for the bots to come in and do that.
I don't know. Yes.
This is an interesting stat. We now have 4,400 listed ETFs in the United States, which is more than the number of U.S. listed companies.
Yes.
Which on the surface of it seems weird.
Yes.
But think about this. We have more recipes than we have ingredients.
That's true. Yeah.
So same thing applies here. You can combine stocks in any almost infinite number of ways to create an ETF.
Yes. Yes.
So one day we may actually have 10 times as many ETFs as there are stocks.
Could be. And maybe we'll start to see the number of listed stocks going up again with a more an administration that is more comfortable with IPOs and whatnot. But one of the reasons we've dropped below 5,000, which has always been the number that people have used, so far below 20% below 5,000, or what is that? 8, whatever, something close to 20% below 5,000, is because the last administration was so not helpful when it came to IPOs.
Yeah, this thing has gone in cycles, I guess, a little bit here over this time period since 2010. I wouldn't hold my breath that we'll have a massive increase in the number of companies. It would be nice if we did, particularly if it's a sign that we have an economy that encourages innovation. If that's what that's signaling, then that's fantastic.
Right.
And then again, one last thing before we get to our NVIDIA discussion. This was all a build up to NVIDIA. Best performing stocks in the S&P over the last 5, 10, 15, 20 years. NVIDIA basically is at the top of every single one of these lists.
Wow.
With the exception of the last 5 years. Supermicro computer is just slightly ahead of them. On the 15-year list, Tesla is number 2 on the 15-year list. Doesn't have a 20-year history yet, so it's not on the 20-year one.
Right.
And it's not on the 10-year list either. I'm sorry, it is. Number 8 on the 10-year list.
Yep.
Okay. So nothing too much to highlight there, but we've got some companies that have had some pretty astounding returns. Okay. I've purposely put this in the back end of the video here because this is a controversial take.
Controversial? You, sir?
Yeah. So I'm trying to insulate myself a little bit from criticism here, Andy. Even though I'm willing to share this, and I shared this on X, so it's already out there in the public.
Yeah, so I want Sarah to know that she should make a clip of this for sure. Sarah is my editor, and she does the clips that you guys see out there. So Sarah, if you're listening, make sure to clip this so we can get Cern way up there, right up in front. I'm sorry, sir. Go ahead. Yes.
I thought Sarah and I were friends, but I guess not. No. All right. So the idea here is that NVIDIA, what I'm questioning is NVIDIA's strategy around distributing capital. I'm not talking about their chips and their business. They're superb as far as I can tell, but I'm not an engineer, so I shouldn't comment on that. But being a finance guy, I think it qualifies me to question and be critical of their capital distribution strategy.
Okay.
And on the surface of it, it seems perfect. But I wanted to dive a little bit deeper and sort of discuss it. So NVIDIA has, over the last, this is since 2014.
Okay.
2014 has, well, the chart shows since 2014, but the numbers I'm going to talk about are from the first quarter of 2021.
Okay.
So it's kind of in this period here where the chart starts to hockey stick up.
Right.
Okay. Since that time period, Nvidia has paid $2.5 billion in dividends. That's the yellow bumps on the bottom here.
Right.
Okay, tiny relative to the next one, which is stock repurchases. Nvidia has purchased almost 94 billion in its own stock. Okay.
Wow.
And this shows here sort of the quarterly amounts. So it fluctuates a little bit, but you can see the trend is way up.
Right.
Okay. Now, Nvidia also pays its employees in stock options. So we have to think about if we're going to do something different than just repurchasing stock and paying dividends, we do need to be mindful of the fact that there is some dilution from stock options. And in this case, Nvidia over this time period has paid $16 billion in stock-based compensation. So not a small number.
Right.
Okay.
I think Jensen has mentioned that he believes he now wins the record for making the most millionaires.
I think that's probably true.
Walmart, I think, had that for a long time, but I think
and Elon's probably in private saying, "Hold my beer, Jensen." Yeah. Okay. Now, if we look then at what I'm calling effective capital return,
okay,
the repurchases plus the dividends less the stock-based compensation, Nvidia has returned about $80 billion
okay,
to what I would call departing shareholders for the most part. Dividends go to current shareholders, but if you do a stock buyback, that's people that are selling their stock. Right now, they might not be selling all of it. They might just be selling a portion, but either way, they're departing shareholders in that sense.
Right.
Now, that helps existing shareholders because it reduces the share count, earnings per share goes up, therefore the stock price goes up and the market cap goes up.
Right.
So everybody benefits. And it's a very tax efficient way if you're doing stock buybacks to get a boost in the share price without having to sell your shares.
Right. But the market,
so that part of it's great.
But the market cap shouldn't go up, right?
Well, it does because you are taking capital. If it's just cash sitting on your balance sheet that's not earning much,
all right, okay,
you're buying your own stock. And of course, in NVIDIA's case, that was a genius move because they bought stock when it was a much cheaper company.
Right.
Okay. What I'm saying here, and you knew this was coming.
Oh,
Yeah. My premise with this is, okay, we are headed into what everybody I think would agree is a very uncertain world. And of course, you could always say that about the future because the future is unknowable. But this is even more unknowable because we're entering into a world of AGI and ASI. Right? We are building intelligent systems that we don't really know yet how this is going to impact and change the world. Right? There's a lot of very smart people talking about this and a lot of very different ideas about how this is going to play out. Will, for example, everybody lose their jobs? Will AI run the world and robots run the world? Or will this be like every other tech revolution in history where we create more new jobs than we displace?
Right.
We don't know yet.
I do.
Randy does. By the book.
By the book.
Yeah. So my thesis here is that as we head into this world, companies might want to change their thinking. Instead of the traditional reward shareholders, buy back stock, boost the share price, boost EPS, right? Maybe they want to keep their capital or more of their capital. So this is kind of a what if. What if Nvidia had purchased Bitcoin instead of buying back stock? Okay. In this case, they would have over 1.4 million Bitcoin by now if they did that.
Okay.
Okay. And today that would be worth about $160 billion. So the 80 billion that they would have purchased in Bitcoin is now worth 160. They would have doubled their money had they done this.
Right.
Now that would still leave the 56 billion that they have in cash intact. I'm not doing anything with that.
Right.
I'm just taking the money that they spent on buybacks, dividends, taking out the stock-based compensation and saying, okay, they returned 80 billion to shareholders. What's an alternative way they could have done this? Okay. So if they keep doing this, they could have this colossal hoard of capital at their disposal. Now, it's interesting when you think about the impact on this. And again, this shows the hypothetical Bitcoin value at 160 billion now versus what their cash reserve has been growing. They've been growing their cash reserves up to about 56 billion. So the Bitcoin holdings would have become more than their cash holdings
Sure.
in Q1 of 2024 had they executed on the strategy. Okay, purely hypothetical. Now, the issue is this, though, Randy. The success of Nvidia now is completely tied to its business success and their ability to innovate and come up with new chips and all that. And that's great. It should be. They should be very focused on that. But from a risk perspective, you've got a company whose value is being driven by its income statement and not its balance sheet.
Right.
So one way to look at this is to say their cash reserves right now is just a shade over 1%, about 1.3% of their market cap. Right. So if you look at the market value of the company, the balance sheet represents about 1.3% of the value of the company.
Right.
Had they purchased Bitcoin, their Bitcoin plus cash could have been closer to 5% of the value of the company. And so that would de-risk the company a little bit as you continue to execute the strategy. More and more of the company is the value of it's represented in its balance sheet, making the future, less uncertain for the company. If there's a blip at some point, or if a competitor comes along and somehow is able to outcompete them, it sort of just de-risks the company. Now, again, I recognize this is going to be a very controversial view. Because every company, basically large company in the S&P, executes the strategy that Nvidia is doing.
Sure. So,
right?
So here comes my question. My main question on this kind of strategy, even including Tesla with their very small Bitcoin holding. Why wouldn't, first of all, if this is strategically wise at all,
yeah,
and you're talking about the company that has the greatest success right now in terms of return on their stock value, or their stock value going up. So therefore, it would be, to the extent that they're buying back stock, they're making a very good decision compared to people who are buying back stock from companies that are flat or just going up a little bit.
Right.
So therefore, everybody should be buying things that they think are going to go up more. Every company, not just Nvidia. And why would they limit it to Bitcoin? They might be looking at the other cyber currencies. They might be looking at other stocks. They might be looking at gold, silver, precious metals. There's a whole range of bonds. There's a whole range of assets where they might figure they might want to have a diversified portfolio across assets. Or they might want to have a portfolio that is kind of related to the business that they're in. So Nvidia might want to buy a stock in the company, their customers or their suppliers, or even their competitors, potentially.
Yeah.
Anyway, so there you are. So what do you think?
Yeah, none of this precludes them from making acquisitions and investing in their business. They should absolutely do that, right? And I wrote in my post that's what they should focus on, right? They should make sure that they're competitive, invest in the business, CapEx, R&D, make acquisitions if they need to, right? Absolutely. What we're talking about here is capital that they are returning to shareholders. They're sending it out the door anyway. So is there an alternative to sending it out the door as we face this incredibly uncertain time that we're headed towards? Right? Might they come to regret the fact that they've sent out $80 billion of capital?
Yeah. So again, sir, my question was not whether they should invest in other companies, et cetera. My company was whether, if we all agree with you, if everybody goes, man, Cern, why isn't every company doing this?
Yeah.
Why isn't Walmart and Target, Kmart, who's that? Anyway, why aren't these other companies Also, instead of dividends, instead of buybacks, instead of just letting the cash sit in money markets,
Yeah.
why isn't every company making strategic decisions about those kinds of funds? And again, not necessarily buying out a good company or even buying 50% or 49 as the new rule is. Not trying to control other companies that are in their field, but maybe just taking a 5% position in a company that's a supplier or or somebody that's related that they think would be a strategic investment that could benefit the company by having them get even a 5% or 10% position.
Yeah. If those things make sense from an operational standpoint, fine. And to the extent they're allowed, I do believe that there are some limitations in terms of U.S. companies buying stocks in other companies as treasury assets. Right. But maybe if there's an operational purpose for making an investment in a company, maybe that's allowed. I'm not an accountant. I don't know the ins and outs of those rules. Right. But there's definitely limitations in terms of what companies can own as a treasury asset.
Right.
Now, Berkshire Hathaway is different because it's a large insurance company. So they have a portfolio of investments they need to manage. Right. So that's different. And most insurance companies buy bonds.
Yeah.
Berkshire Hathaway has swum the other direction and bought equities and been very successful over the years.
Yeah.
Right. But that was deemed to be crazy by most people when they were executing that.
Yeah, but in a way, it's kind of what you're saying. So now a more narrow question is, I've had at least one person in my comments say, why only Bitcoin, Ethereum now? And they wanted me to ask you this, why Ethereum would appear right now to have more upside or a higher percentage upside, as it might be going to catch up with Bitcoin compared to Bitcoin.
So I'm not an expert on the differences between Ethereum and Bitcoin, but let me share with you my understanding.
Sure.
Bitcoin is really the only decentralized, cryptocurrency, crypto asset at this point. Ethereum was created by a group of people that basically pre-mined the coin and got the benefits to themselves.
Okay.
Right. It's controlled by a foundation. There have been things in the past that were done that a lot of people are very upset with. Right. It doesn't use the same. So there's two issues. One is who controls it. In the case of Bitcoin, it's decentralized.
Right.
In the case of Ethereum and these other crypto assets, there's groups of people that control them or have more control. The other thing is the security aspect. Bitcoin uses proof of work, which is basically using real world energy to give somebody the right to make a transaction on the ledger.
Right.
It's decentralized, so there's this method for figuring out who gets to put what on the ledger. You have to expend a lot of energy if you want to play that game.
Right.
With Ethereum, it's different. There's a different structure. It's proof of stake. And again, I'm not here to talk about all the ins and outs technically of all the stuff. And while Bitcoin may not be perfect in every regard, it's a whole lot better, in as far as I can tell, in my understanding, than Ethereum and every other crypto asset out there. Initially, a lot of these other crypto assets took shortcuts because they thought that Bitcoin was using too much energy. Right. But that's like looking at the US military and saying, you have too many battleships. You have too big of an air force. Well, you know what? That's what keeps us safe, is because we have the military might that no one wants to mess with, because if they do, they know they're going to get absolutely destroyed.
Right.
And so the same concept kind of applies with Bitcoin. If you're going to attack Bitcoin and try to control it, you're going to have to, it's going to be a huge battle. You're going to have to expend a ton of energy and a huge cost to put up the computers to do it. That does not apply with these other crypto assets. So I'm not suggesting these other crypto assets are not useful. I think Ethereum could be very useful in the digital contract space. But it's not money. It's not a store of value. Right? Solana could be very useful as a rapid transaction platform. and that will make that crypto asset valuable. But again, it's not money. It's not a store of value.
Right.
So these things are very different. They all get wrapped up in the same space and the same discussion. But to me, Bitcoin is in a league of its own. And Michael Saylor likes to say, and others like to say, there is no second best. Right. But that doesn't mean that Ethereum and Solana and this other stuff is worthless. It's just not in the same category.
Right.
It's sort of like saying, you're looking at buying equities. Well, why not bonds? Well, they're two different things. It's this kind of the same thing here. But from a security standpoint, if you're putting the capital of your company in something, you want it to be very secure. And that's my biggest issue, I think, with Ethereum and some of these others is I'm not convinced that they've got the security nailed down.
Right.
Now, when I've talked about this in the past, there's other people that have commented and come at me with issues that they think about Bitcoin security. Bitcoin nodes and different things. Fine. There may well be some issues with Bitcoin too. Right. I'm not suggesting it's like perfect, but it's much improved over all of the other things that we have available to us today, is my understanding.
Yeah.
Okay.
Yeah. So I think this is fascinating. I think it's fascinating, not just from the Bitcoin standpoint, but rather from we have to go back and see as a percentage of value have previous companies like Standard Oil, General Electric, et cetera, done dividends at these levels, done buybacks at these levels. In terms of the wisdom of how they manage this part of the business. It'd be fascinating to see what others have done in the past, but it seems like these companies today have much larger cash balance sheets and are returning massive amounts in terms of cash through buybacks and through dividends. So, Apple being a standout example.
Yeah, the challenge though is when you look at it as a percentage basis, Nvidia's cash, for example, is just over 1% of their total market cap.
Well, yeah, exactly.
So while 56 billion sounds like a huge number, right? It's on a $4.4 trillion company, whatever it is.
Yeah.
It's not, right? So
but is the percentage of its market cap important, or is it the percentage of its revenue or its turnover?
Well, you could look at it any number of ways. I think for me, market cap is probably the most instructive. That's the market value of the company. Right. And again, it shows that if 1% of the value of your company is on your balance sheet and the other 99 is driven by your income statement, that risk equation might be a little bit out of whack. Wouldn't it be nice to have maybe a bit more balance there, even if it was 10%?
Right.
Which in the case of Nvidia would be $440 billion. And the problem is if you keep that in cash, it's a drag on the returns of the company.
Oh, absolutely. Yes.
Right. And so the reason that the world is like this is because they don't have any other good options, but now we do.
Yeah.
Right. We do have another good option to store value in a secure way that's performing really well and not such a drag on the company. And that also could put them in a stronger position in the future if something happens to them.
Right.
Right. Like, wouldn't have Intel have wished that they had 400 billion in cash on their balance sheet instead of going to the government and saying, "Hey, will you make an investment in us?"
Right.
Right.
And Berkshire does have, right? Don't they have like 550 billion on cash right now?
About 330 billion.
Okay.
Yeah.
So
but again, that's kind of reserves for their insurance operations.
Right.
So that's different. They need those reserves.
Well, no, this is like way higher than it's ever been for them. And they're just not, they've said the same thing. They said, we don't have any, there's nothing out there that fits our model in terms of something to invest in.
Yeah, because again, that capital is a reserve for their insurance business, their super cat business, which one day could have some catastrophic claims.
Right.
And Berkshire needs to be available to deliver, 100 billion in capital. They have to be very diligent about how they invest that. it's not a relative game that, can we invest and beat the S&P by 1%? It's more of an absolute issue. Like, are we going to lose money in this investment? We can't have that. We have to have some surety that we're not going to lose money. Even though they can deal with volatility,
Yeah.
they're more focused on the preservation of capital.
Right. Right.
Um,
Although they did invest in BYD.
well, they made money in BYD.
I know, but I'm just saying.
Yeah. Yeah.
Yeah.
Now, this is the final chart on this.
Okay.
I just compared the hypothetical strategy here for Nvidia
Right.
with what MicroStrategy, and it's now called Strategy, what they had actually done.
Right.
So
Yeah.
MicroStrategy is the largest corporate holder of Bitcoin.
Yeah.
But Nvidia, had they executed on the strategy, they
Yes.
would be head and shoulders above MicroStrategy. So and this is another interesting thing to think about, is if Bitcoin does become the dominant store of value in the future.
Mhm.
Right now it's not. It's a some $2 trillion asset. But if it becomes dominant, like gold at 22 trillion,
Right.
companies are going to be clamoring for their share of that. Not just companies, but people and governments too. And so here's an opportunity, I think, for some forward-looking companies to say, let's make sure we get our share. If this does take off, we want to be in a position where we're not the last one in the door.
Right.
Now, Nvidia doesn't have to do this strategy and put all 80 billion into Bitcoin, but I would strongly suggest that they start buying some, even if just a little bit. And again, Tesla has some. They have 11,000 and change Bitcoin. It's tiny compared to
Sure.
what MicroStrategy has. 11,000 on this chart would be way down here somewhere. Right?
You know what? I just realized Nvidia has been investing in some of their customers.
Yeah.
Small amounts in their customers.
Yeah, they've invested in Figure and other
Yeah.
startup companies. Yeah, definitely.
Yeah.
Yeah.
Interesting. So this would be again, I'm trying to as much as I know that you like to talk about Bitcoin, and I am very intrigued by Bitcoin, and I think it's one of the most important topics in the finance world right now. And only 10%, was it 10% or something of human beings or Americans or whatever have any Bitcoin in their portfolio? Some small number.
Yeah, that's actually pretty impressive. But yes.
No, but it's still small when you think about it.
Yeah. Yeah.
So there's a lot of opportunity for more people to say,
yes.
I want to have some of that. It's now going to be available for 401ks. Is that correct? I understand there's maybe some lawsuits coming on that, but theoretically, it's going to be potential to buy Bitcoin in some form in your 401k.
Yeah, to me, it's likely to be in ETFs or mutual funds or something. But if it's direct, that would be even better.
Yeah.
But we'll see what happens there. But yeah, I think that's coming.
Okay.
Yep. And of course, for companies that do hold cash, expectations now for the returns on cash is coming down. Here's the expectations for Fed funds.
Yeah. Yeah.
All right. By the end of next year, we're looking at maybe a 3% Fed funds rate.
Right.
Now, of course, expectations are famous for being wrong.
Yeah.
Right. And I think we've had these kinds of expectations for Fed funds now for a few years, and it hasn't happened yet.
I would this is a very good bet. It's a very good bet for which I should probably be buying bonds right now, but I'm not.
Yeah, again, this is short term. I guess the question is what happens to longer term rates?
Yeah.
Right. That can sometimes be very different. And again, this is interesting. If you're holding, a whole bunch of cash right now, earning 4.3%, you may say, yeah, I'm okay with that. That's pretty good.
Yeah.
Because you probably remember the days when you were earning nothing on it.
Right.
Right. But if you look at this curve and you start to say, okay, well, a year from now, I might be only earning 3% on that cash, it starts to feel a little less appealing. Right.
Except that if I held it all that time, my bond value went up dramatically.
If you're owning bonds, but I'm talking about holding cash.
Oh, okay. Holding cash.
In that case, there's no appreciation. You're just suffering from the lost income.
Right.
But yes, if you own bonds and they had a similar trajectory, yes, the bond prices would go up as rates went down. Yes.
Yeah.
Yeah. Now it's interesting. Again, just back to MicroStrategy, they've got 4 different preferred securities now,
Mm,
And one of them, this STRC, is like a cash alternative. It has no interest rate risk.
mm,
And they just increased the yield on that to 10%.
mm.
Previously, it was at 9.
Wow.
So 10% versus 4,
Right.
it's a pretty good pickup,
It's a pretty good pickup.
right? And it's backed by, their holdings of Bitcoin as collateral.
Right.
So anyway, that's interesting. I don't need to spend a lot of time on that, but some of these yields and some of these others too are quite interesting. And some of these do, by the way, have duration. So if rates go down, you could actually get appreciation in some of these instruments in
Yeah.
addition to the higher yields. Okay.
Yep.
All right. And then we've updated this, Randy. There's now 3 certainties in life. It used to be 2. It used to be just death and taxes. Now it's and printing money. We found another certainty. M2 money supply now all-time high, 22.1 trillion.
Yes. What about velocity, though? That's the bigger question.
Well, velocity, I think, has come way down, right?
It has, yes.
Yeah.
So for those who don't watch it, you should always watch. It'll be on Saturday sometime. We do Larry Goldberg and I do the Cathie Wood analysis of we analyze Cathie Wood's analysis of where we are in the economy, which is always one of the best shows of the month. Larry and I we like it the best by far. And some people actually watch it. No, we actually get a very good crowd watching it, where we'll be talking about all of these issues and more. But yeah, I think we're still restrictive, even though we printed a lot of money previously. The overall economy still seems restrictive.
Yeah. Cartoon for you.
Okay.
Market signal? What market signal? And the 2 gentlemen standing next to him says bag holder. Anyway, all right. In the last show, we showed Optimus and Mark Benioff and Elon interacting with them.
Yeah.
We did have a video drop yesterday for Figure as well. And from Corey Lynch here, he says, Helix, load the dishwasher.
Yeah.
And he says, no algorithmic changes, just new data. So Figure continues to show us some videos of their development. It's encouraging. We're not getting a lot from Tesla these days, and the videos we get aren't that great. But here we've got some images of Figure grabbing dishes, and it looked like it dropped it there. This is just a couple of screenshots. So it didn't actually drop the plate.
Right,
He placed the plate in the dishwasher, grabbed the glass and put the glass in the dishwasher quite expertly,
Mm-hmm.
and then plates.
Mm-hmm.
Stacked them in there quite nicely. It has a special technique for sort of pressing the back of the plate so it flips up the front so it can put his hand underneath.
Okay.
Right. The only thing I was critical of is the way that it closed this. It kind of slammed it in there pretty hard. So there's some room for improvement. Otherwise, might have a bunch of broken dishes.
So one thing for sure about this that I can tell you, this is an absolute guarantee. It won't be done right according to the woman of the house.
Right. Sure. But she'll be happy that she doesn't have to do it. So maybe she'll care a little less.
I don't know. It didn't seem to work in my house this year.
Yeah. I think in my wife's case, I think she'd be quite happy to let Optimus wash the dishes. And if there was a few broken plates every now and then, I don't think she would worry about that. Yeah. So there you can see a close up of sort of pushing the plate down on one side so that it can grab the edge.
Yeah.
And then placing the plate in the back of the dishwasher.
Oh, yeah. It's going to be a great.
And then grabbing the glass.
2026 is going to be amazing.
Yeah. So anyway, that was a good little short video. Again, no special extra training over what it's been doing in terms of putting clothes in the washing machine, folding laundry. Now it's loading the dishwasher.
Right. Right.
Just with new data. So that's encouraging that they're figuring out ways to get that to work.
100%.
I'd love to see an update from Tesla on that, and maybe this fall we will get one.
I suspect we will. I think that it appears that they've made some, I mean, barely, but sort of watching some of the back and forth on X about the hand and people thinking that they completely blew it somehow on on the hand and they've started over on the hand and blah, blah, blah. I'm not sure any of that's true because it's all speculation. But at some point, I think Elon will get the bot at the level where it's ready for show and tell.
Yeah, we're still in the early days of bot development. There's still a long time ahead of us. Even if Tesla did find themselves behind the 8 ball, there's plenty of time to catch up. I like what I'm seeing from Figure. And again, I appreciate the fact that they're sharing some of these videos with us. Of course, they're still recruiting people, so they're using it as a recruiting tool, and that's fine. But at least we're seeing something.
Yeah, it's very good. Yeah, it's really fun to watch the progress on this entire thing. It's absolute. Again, my sense. I'm, when you step out and you're willing to make predictions about the future, and every once in a while you're actually right. So I've been predicting 2026 as being the crazy year for Tesla primarily, but mostly because of robotaxi and Optimus, but semi-truck too, and energy. I mean, so many things happening in 2026 that they're going to come together in 2026. So I'm excited about what we're going to be looking at.
Well, Elon used the word epic. Perhaps you would agree with that. And then ridiculous 27 and 28.
Exactly.
So yeah, the next 3 years should be quite interesting. But then, that's when Optimus was just really going to start. So we're going to have to find some other words to describe, 29 and 30 and beyond.
And there'll be new things. Yeah.
Yeah.
There'll be new things, new ideas. All right, CERN. Of course, as always, we thank you for putting together such a fun slideshow. And everybody go out and buy Bitcoin. No. This is not investment advice. I still only have my $10 worth, although it might have gone up. It might be like 15 or 18 now or something. Somebody gifted me $10 and so I have a wallet with $10 somewhere.
There's a good sort of parallel, right? So the Dutch arrive in the New World.
Yes.
And they pay for what is now known as Manhattan.
Beads.
Right. So the natives were quite happy to get the trinkets and the beads, right, for the land that they didn't see what the value was. And of course, the Dutch had plans.
They had plans. Yeah.
Right. And look at the value that was created. And so the message with that is sometimes it's good to get your hands on something that's new, that's a little uncertain, that's unproven, but it has potential.
Yes. That would certainly be true. Again, thank you, CERN. And to everybody out there, it has been great talking to you.
Thanks, Randy.